Morning all, it's the 23rd of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Hello, mate. How are you?
Yeah, I'm all right, thank you. And you?
Yeah, all right. Not too bad. Markets have been pretty mental overnight, haven't they?
Yeah, all go by the looks of things. I can start off on FX if you want, or just run through some headlines quickly. Actually, we've got on the coronavirus front, we've got Germany on the verge of going into a harsh lockdown over the Easter break. The incident rates of COVID-19 have nearly doubled in the past month, which is threatening to overwhelm the hospitals, which is obviously a concern. All stores will be shut for 5 days, except for a brief respite for food stores. Merkel saying that they're now in a very, very serious situation. Boris Johnson obviously warned that in the UK, we tend to follow what goes or what happens in Europe. So there's potential for another wave of cases potentially over the coming weeks. I think I had a note today that my someone in her class had just contracted COVID-19. So I don't know what that's going to mean for her, whether or not she'll be isolating for the next week or so. Which I'm sure she'll be delighted with. We've then got all eyes on the US Federal Reserve. We've got Jerome Powell and Treasury Secretary Janet Yellen both speaking on the pandemic response. Yellen is expected to not only highlight the improved economic outlook and the dramatic expansion in help to households from the bill, but also highlight the need for more spending, and that's partly going to be paid for with higher taxes. And that hearing comes as the Biden administration is reportedly considering as much as $3 trillion worth of new measures. So they're properly going for it in the US to obviously get on top of this. Elsewhere, we've got elections in Israel today. It's set to be a tightly contested election after a successful vaccine rollout has failed to give the incumbent Benjamin Netanyahu a clear edge. The polls who look as though it's going to be a coalition is going to have to be formed there for the fourth election in 2 years. So may have an influence on what happens. But we can jump straight into the charts. Also, there was some news out with regards to New Zealand yesterday. Did you see that, Steve?
Well, I sort of felt it in the overnight trade ideas. Got a little bit hammered.
Absolutely. So they've taken some pretty dramatic steps to tackle property speculators with a set of new rules. The move comes as surging house prices keep putting homes out of reach for first-time buyers and people on lower incomes. They talk about a dangerous bubble forming over there and house prices really sort of running away. So as a result, we have seen some measures put in place, and that has slapped the New Zealand dollar, as we'll come on to see in a moment. So this is the currency baskets that we talk about most mornings. Obviously, all of the currency baskets plotted on one chart. In the blue line here, we've got the dollar index, and this is going back to 22nd. So we've got a month view here, 22nd of Feb. The dollar index continues to be the strongest at the moment and continues to be strengthening further still. It's up another 0.35% today. We've got the Canadian dollar up here as well in orange. Down here, we've got the safer haven currencies, which have been very unloved. So we've got the Swiss franc and the Japanese yen. Some signs that they may be ticking up, particularly the Swiss franc. If we can take out that high there that we posted on the 17th of March, then that could mean we see a decent correction to the upside. But as you can see, trending lower in the middle here, we've got these sort of riskier currencies like the Aussie dollar and the New Zealand dollar, which have come under a bit of pressure. If we just isolate the New Zealand dollar there, you can see it's really come off quite dramatically from those highs and further weakness again today. And we'll come on to see that in some of the individual currencies shortly. Just for instance, if you look at New Zealand dollar, Japanese yen, we can see quite a dramatic sell-off there has taken shape. There's the daily chart. And a big break of trend there as well, which I think is probably a bit of a warning shot. Maybe a time to start unraveling some of these riskier positions there, I reckon. What do you think, Steve?
Yeah, that makes perfect sense to me. Yeah, I was thinking about just how sort of like what a big move that was last night in the New Zealand dollar. Really sort of like But I was actually thinking about I can't buy those 2 properties I was looking at in New Zealand now.
Oh no,
So gutted.
certainly wouldn't have been able to fly there and get them anyway.
No, I was going to buy them virtually, Joe.
Oh, yeah, digital
Just
NFTs, yeah.
yeah, just digital
Lovely.
ones.
Digital ones, yeah.
Yeah, just these digital houses. We're going to speak about that, aren't we, later in the week?
Yeah.
We'll explain a bit more later, but quite exciting. Yeah, I think sort of like looking at the sort of like indices, it feels a bit like deja vu. Like we were sitting here yesterday, and I was looking at the market, thinking we've had a bit of a sell-off overnight, and then bang, the 8 o'clock to 9 o'clock hour, it sort of like seems to turn around. And it's
Yeah.
sort of as this European sentiment wave, maybe.
Maybe.
Interesting.
Look at this on the dollar index. So yesterday we had this candle here, which was a pretty odd looking candle really. So we've gone all the way up to these highs and then closed all the way back down here at these lows. But today we're sort of roaring back higher again. I mean, that's not a bullish candle by any stretch of the imagination.
No.
But we're backing it up today with higher prices. So while we remain,
we've still got however many hours it is, 14 hours to go before the end of the day. I mean, that can turn around and form another bearish candle, doesn't it? Really?
Yeah, potentially.
I know it's got that flag formation. It looks like it's trying to break out. But so if it does obviously take out that yesterday and the day before's highs, then and close above there, then I'd feel really bullish about it.
Yeah, so I think that's probably the key level to watch then today, 92.16. If we can get a close above there come 10 o'clock tonight UK time, then I think we can start getting even more bullish about the prospects of that. And then we're sort of targeting these levels up here at 9400 to 9450. So still bullish on the US dollar for me, I think, at the moment.
Yeah, we can't really argue much against that.
If we look at just quickly some of these other currencies, so we've got this Aussie dollar set up, which I've been talking about, this potential head and shoulders top. Need it to get below 76.21 to confirm that. We look as though we've got an engulfing candle forming today. As Steve rightly mentioned, though, we've got a long time to go between now and 10 o'clock tonight, so we'll keep an eye on that. The New Zealand dollar, US dollar, that's quite interesting. Obviously, we've seen a bit of an earthquake, I guess, in the New Zealand dollar currency overnight, and that's at the moment breaking down below this key support at 70.98, which looks really to have formed a top, I think, that on the daily chart. So we can be looking at lower prices there if we get that confirmed on a closing basis. And in terms of downside targets, I think I'll be looking down here at sort of 67.35. I wonder if that is also a fib retracement level. It's amazing how these things often work. Let's have a look. Is that 38.2? Oh,
not far away.
No. So down to 6,700. In sort of this range, I guess we'd be looking for a pullback. So that'll do, won't it?
That'll do, donkey.
And it would still be bullish overall, I think, but that would just be a pretty healthy correction given, the strength that we've seen there since this time last year from the March lows.
Yeah. I mean, you can see the sort of like the volume spikes as well that were sort of like over the last
in recent
week.
times. Yeah. So that would be signaling a top potentially. Smart money maybe exiting up here.
Yeah.
Yeah, interesting. What else have we got? So dollar CAD, big old wedge forming here, certainly tightening up in terms of the upper and lower end of the band. If that breaks out, then we may see a continuation higher. First target would be that 38.2 again at 132.44. Dollar Swiss, again another situation where we might have a bit of a flag forming, although yesterday's candle wasn't really supportive of that. That was a big old engulfing, but we're trying to take that back today. I think if we can see a high above 93.20, then we can look for a continuation higher on that. Potentially a bit of a handle and cup formation, or cup and handle formation going on there.
Yeah.
What have we got here? So this continues to sort of be trapped around here at this 109.36 level on this long-term downtrend resistance that we've drawn on the daily chart. Just zoom out so you can see that. Bashed its head against that level and failing for now.
Do you think it's a champagne bottle just being shook up and ready to sort of like absolutely pop, or do you think we're going to get the correction?
I don't know. I mean, I'm bullish of US dollar, but Japanese yen has been totally unloved and often is seen as a bit of a safe haven. So it might be the battle for the safe havens
Yeah,
that goes on there.
I think
It
I
just
don't know what
depends.
the what's going to sort of like cause the event, what event it will be that will actually sort of like, it does feel like we're on the verge of one. I don't know what it is though.
No, I don't know. I mean, this is euro dollar. It's not really doing an awful lot. It's obviously, we're watching what happens with the dollar index. But if we get a break below this 118.35, then I think we see a continuation lower down to 116.95. But not really expecting much going on there. So I think there's probably better opportunities in the market today. What else have we got? Cable. That's testing this trend channel. I think I've got a sort of final line in the sand there at sort of 37.59. If we break that, then I'd sort of give up on this channel and think that we may have formed a short-term top and would see a bit of a correction lower on that as well. So yeah, all getting a bit more interested in FX, I think, after a while of it not being particularly interesting.
Yeah.
What's it looking like on the indices and the metals, Steve?
Well, again, it's just a little bit similar. If we have a look at gold, obviously this is the weekly chart that we've been talking about, this bullish flag for an extension higher this week, or sorry, this is on the monthly. Whoa, this is a monthly chart, and it's closing quite nice. It's like a bullish hammer on the monthly chart. Let's drill down to the weekly chart, and this is what we're looking at. The sort of like the long-term target, if this is a bullish flag, we get the extension higher towards $2,500. That would be a dollar collapse, but obviously not for a while. On the intraday basis, we've been chopping around between 1720 and 17. Well, I suppose we could say 1755, and we're just going in this sideways. Let's look at it on the daily charts a bit clearer. We can see this just sideways price action, bit of a diamond formation maybe, ready to sort of like break out one way or the other. Obviously, dollar strength would lead to a sell-off in gold, but it just feels like we're in the middle, and we're waiting for some sort of market event to sort of move us one way or the other. Could it be yields going higher? I don't know. That is the sort of thing that really concerns the market. You've got the central bankers sort of almost just trading the yields. This is the way it's going, and you've got the sort of like the economies, the governments really not liking the fact that the yields going higher. But what can they do? They sort of, that if they do raise rates, it sort of like plunges the whole economy, the whole world economy into a huge debt crisis, and that's not good for anyone. But can they contain this sort of like spike higher? That could be the sort of like the catalyst. I don't know. On the oil, we had the sell-off, and we've had a little bit of a correction higher, but if it ended up in a doji, a bit of an uncertain day yesterday, and overnight we're pushing lower. It feels again on the oil front that we could be heading for a little bit of renewed weakness. I suppose the indices for me, really, like I said, it feels a bit deja vu-ish. If we look at what time was this yesterday? 8 o'clock yesterday, had this big bullish hammer, and then the market continued higher, but then sort of like fades into the night. Again, 8 o'clock this morning, complete reversal of everything, and I don't know if we've got enough strength to sort of like carry on higher. We've got 67.35 in the FTSE, but obviously above we got this 68.10 level that we're looking at. But if you think about it, I'm always looking for head and shoulders formations, even inverse ones. I don't care what they are, inverse or normal. So that's potential for an inverse head and shoulders. If we get a break of that 67.35 level, we could continue back up to the retest of 68.10 level. The same on DAX yesterday. What a huge engulfing candle, bullish outside candle. Today, a bullish hammer. hasn't quite engulfed the previous price action, but it is a bullish hammer. It's rejected the move lower from 14,500 probably and 13. I like the 13 level, and we're trading strongly higher from there, nearly 100 points higher over the last hour. We'd see the same in the CAC as well. Bullish hammer rejecting this sell-off, but I don't know how long it'll last. It still feels to me that the US is under a bit of pressure, and we got this big resistance on the Dow Jones. Really, the devil to watch in the Dow Jones, 32,810. And the Nasdaq remains a little bit under pressure, although it is above the hourly Ichimoku cloud. So a little bit of a recovery there in the Nasdaq. S&P's 39.35 trading. We've got the 4,000 level, which seems like a distant memory. But are we building ourselves up for another go at it? Bit of a bullish flag forming here that we've got to really watch. So watch these levels. See if we do get a break above the 39.57. I think we've got enough in us to take out or at least test the 4,000 level. 3,990 is the high in there. So how's that impacted on the other indices? Obviously, China is under severe pressure, has been for a while, and we've got a level 16,842, which we've reacted off, but that's a sort of a bit of a nervy time for China stocks. But the momentum, the downward momentum, looks to be stalling. So maybe we're sort of like trying to form a bottom here as well. Hang Seng very much looks to me like we should be watching for the head and shoulders formation. So we're at critical levels here. Really, though, a break of 28,000 would, for me, and a close below there would confirm that we have that got that formation, and the extended and the measured move target would look at targeting somewhere in the region of 25,750, back to these congestion lows here. So yeah, that's pretty much it. Cryptocurrency. Have a little look at cryptos. Bitcoin's struggling to get and hold above that 60,000 level. We've had a couple of negative days, and again on the back foot this morning. Last week's swing low of 53,220 is close to being under pressure. And as we see, bearish momentum sort of like coming into the market here. So a healthy correction wouldn't go amiss in the cryptos as well. That's about it, Joe.
Okay, thanks, Steve. Okay, so what we got today, we've obviously got this chat that we mentioned between Yellen and Powell. So that is worthwhile keeping an eye out for in terms of the headlines that will come out from that. We've got the ongoing situation with regards to the vaccines in Europe and the UK, which hopefully is sorting itself out. And obviously we've got the threat of new lockdowns in Europe. So plenty going on in terms of data today. At 2 p.m. we've got US new home sales expected to see a rise of 1.2% month on month. And we've also got Bank of England Governor Bailey speaking today as well. So plenty of central bank action. So keep an eye out on the news wires for the commentary coming out there. We were having a chat offline about NFTs, non-fungible tokens. So if anybody can reach out to Steve and I and educate us on these things, because from what we've seen, they look a bit crazy and we can't quite get our head around what's going on with some of these things. There was a news article overnight about Jack Dorsey's first tweet being sold for 2.9 million US dollars. It was a tweet that he posted when he was 15-year-old saying, "Just setting up my Twitter," which has been said to be the latest example of digital art gaining popularity with non-fungible tokens. We also saw another article about a digital home being sold for $500,000. So I can't quite get my head around this. So if anybody wants to educate us dinosaurs on this, then please reach out to support@signalcentre.com.
Yeah, we definitely need some support in that. It's it feels to me a little bit like gamified, where you obviously the sort of like you get these free games online like Warzone and what's your kids play, Joe?
Fortnite.
Fortnite and what's the original one? The one they just used to build houses with blocks, very sort of like basic
Minecraft.
graphics. Minecraft, yeah, and things like that. And you could sort of like build fantastic looking virtual buildings, vehicles, whatever, and they'd take time and effort, and that would create the value. It feels a little bit like that. You can sort of buy skins on Warzone. The game's free, but you could spend sort of hundreds and thousands of pounds on just speeding up the process. So,
I was
is it
saying to
something like
my
that?
pal yesterday, I was out running with my friend, and he was telling me about these NFTs and a couple of things that he was looking at. I think something to do with the NBA, something along those lines. And it just sounded to me like a big old financial game of hot potato. I mean, you're passing these things around and they're going up and up in value. You just hope that you're not buying in at the top, don't you? And the
Yeah.
thing collapses.
Well, like you said, the virtual home selling for 500,000, was it?
Yeah.
I mean, what is that? You sort of like, yeah, I don't know. We'll have to
Maybe we've
find out
got the
more
wrong
about
end of the stick. We need we need to do some research. And
it. Yeah.
if anyone wants to step forward and educate us, please feel free to reach out. I guess we haven't done any trades of the day, Steve.
Oh, do we have to?
Yeah. So
Yeah.
yesterday what happened yesterday? We got where's my screen gone?
We got battered, mate. I did.
Yeah,
I
you
got
got
stopped.
stopped out on Inception. You got stopped out on oil, was it? And I
Yeah.
was half an hour down on Aussie dollar, which, if I'd held on for a few extra hours, it would have been all right. But that's the game. Have you got anything you fancy this morning, or have you not had any chance yet to have a look? There was something I
Um.
was looking at. I was looking at the indices
Okay. You go indices. I might go.
because, as you keep saying, you're getting these big old turnarounds intraday. Well, in the mornings in particular, and I'm wondering whether or not the CAC is maybe the best option from a risk reward perspective, because when I see these candles, I want to buy them on the close and I want to have a stop loss below the low, and then obviously I want to have a target which is at least 2 times bigger than that stop. I don't know how realistic it is for the CAC to get up here today, but I'm going to give it a go anyway. So I'm buying at 59.49. Stop loss below the low of that candle there that we posted at 8 o'clock, which is a really nice reversal candle at 59.15, and targeting 60.30. So looking for 2.48R on that. And I'd certainly get a little bit more excited if we can break out of this sort of corrective channel. I think that would give it more of a chance. But that's my idea for today.
Okay, mate. I'm going to go and see what's going on. New Zealand dollar, Aussie dollar. So that for me, well, I suppose, yeah, let's go sterling, New Zealand dollar. It's had a big move overnight. Look at that spike in there. And look at this bearish engulfing over the last hour. So is that the end of it? Don't
Maybe
know.
I was
Let's have a
thinking the
go.
same.
Oh, yeah. Okay. So you're going to take a bit of credit for it as well, are you?
No.
Let's have a stop just above the hour, the high of that candle and this move. Getting short at, what is it, 195. What is the level trading? Is it green level? 195.50.
Yep.
Is that right?
Yep.
195.50, 550, and we'll just make it a 2-to-1. I tell you what, make it 3-to-1. 3-to-1 sort of correction all the way back. So getting short of sterling New Zealand dollar 195.50. The target is 193.85 and the stop is at 196.05.
Beautiful. Okay, best of luck. So there's the two trades. We have a long on the CAC and we have a short on sterling New Zealand dollar. We can wrap it up there for the day and we'll be back tomorrow morning.
Lovely.
Have a good one.
Cheers.